Da da da. So, what was I reading earlier? Let's pull up some stuff. Crazy how like the market's kind of fragmented. I've noticed. Rivian's been ripping. That one's been just going absolutely bonkers. I'm talking about self-driving vehicles, which is cool and all, but there's like red everywhere. Let's see. Let's see what I'm looking at. I'm seeing a lot of red. Oracle down, AMD down, Bitcoin down, S&P down, Intel down. Oh my gosh, even the famed Google Alphabet down. Tech leads to clients kick off big data week. Yeah, I read a thing that they're rotating out of big tech. That's the big news this week. They are rotating out of big tech. So let's see. Looks like we got some folks in the chat. I don't know why it always goes to this view whenever I like click out. What's going on in the chat, y'all? Public chat. Hello. All right, bought some more Celsius. Good for you. I'm kind of at my limit, but I have a full position now. It's definitely it's gonna take a quarter or two for everything to like shake out, but I think it's definitely gonna rock. Very good questions. Any tips on starting a new job first day to first review? So I'd say anytime you start a new job, super positive, lots of smiles, okay? You want to be the type of person that other people want to be around. I don't think people realize how incredibly important that is. No matter what's going on outside, leave everything at the door. It's not a like school's very different because you could have like, a bad day and like, oh, what's wrong, Ken? It's like, oh, my girlfriend left me. It's like, oh, that's too bad. Like with work, like keep personal and business completely separate. Leave everything at the door. Now, I understand how difficult that is, like mentally and realistically, but that is advice number one. Advice number two, ask questions, be curious. The impression that you want to give is that you want to be the best person possible for your position. So let's say you're a financial analyst. You want to be the best financial analyst. How can you improve? So these are the types of things that I would be asking starting out. Is there anything I should be reading? Is there anything I should be doing? How can I improve? How can I get better? I want to try to, be as good as I can be, blah, blah, blah. Now, one of the things that you do have to be careful of, and this is a problem that I had when I first started out, when you start working, they're giving you unique problems that require unique solutions. If someone knew the answer to the question, they wouldn't give it to you. Like when you work in the real world, it's not busy work. Someone's giving you something because they don't know the answer. So in reality, like when I give students, questions, I already know the answer. So I'm doing it to kind of like determine whether or not they understand the material, etc. When you're working, not the case. If someone's asking you to do something, it's because they don't know the answer and they want you to find it out. So very important to seek feedback. All right. Biggest mistake I see a lot of folks make, they don't seek feedback. And then what happens is at the end of the year, when you get your review, they're like, hey, Ken, just a few things. Every time, people are giving you instructions, you always have this look on your face like this, almost like you're questioning why they're asking you to do something. It's like, oh my gosh, I didn't even realize that. Yeah, it kind of irks a lot of people. That's just feedback that we want to give you. Now, if someone would have told me that, obviously, like I would have fixed it, right? But that type of stuff, you have to be proactive about. So you have to be proactive about seeking feedback from others. That is something that is incredibly important. So that's another piece of advice I would definitely give. But literally asking, like, how can I improve? How can I get better? How can I be the best at this particular function? The other thing that's very important, and this is kind of like a generational thing. Right now, everything seems like so fast, right? Like so rapid. Everything's so rapid. But when you talk about job, career, all of that takes time. So what is 6 months to you might feel like 6 years. It's still just 6 months. So you have to have perspective. It's weird because there's certain things that you'll struggle with in the beginning and then you'll just crush. So my advice, when you start working in a job, you want to be the best at that particular function so that people can give you more difficult things and you can start rising the ranks and rising the ladder. Master whatever it is that people ask you to do, even if it's mindless stuff, even if you're like, oh my gosh, this is so stupid, be the best at it, master it. The idea is you want to be able to delegate that to someone else. The only way you could delegate to someone else is if you have mastered that, period. So those are some very important things. And this applies to internships as well. Very important things that people don't do enough of. They don't ask for feedback. They, have a poor attitude. No one's giving you busy work. Like, I know that's like, people don't realize that. When you're talking about a major for-profit company, like the only way they're going to make more money is if they create more value. So nobody's giving you busy work, okay? But these are the key things that I would advise, and I'm happy to go deeper if you want me to go into more detail or if you have any follow-ups with that. But that stuff is incredibly important. But what I've noticed probably over the last 5 years is everybody has like ants in their pants. And it's like, yeah, I think I need to make a move. And it's like, you've been working for 3 months. What kind of move are you thinking of making? Like different coffee from the coffee area? Like what kind of move? You need to have experience. Once you start working, your value is going to be in the experience that you have, that you bring. And I know like this is like a little controversial, especially with like, my students, but I'm just saying like, I'm like your older brother. Like, I'm just giving it to you real. Like legitimately, you have nothing to offer. And they're like, oh my gosh. And I'm like, don't worry. It's okay. Like you're a hard worker. You have curiosity. You're willing to work. That's all you're offering because you have no experience. Once you have experience, then you have something to offer. Then you're bringing something to the table. So take investment banking, for example. If you do 50 deals, you know how to structure a deal. You know what's going to get a deal done. You know how to close a deal. You know how to manage the deal process. That's a skill. So the whole idea is once you start working, you want to develop those skills. That is going to be the absolute most important thing. So hopefully that was helpful. Da-da. I have a question. What is a good job to get if you major in finance? Investment banking. That is the most difficult job to get, the most lucrative job to get, and the job that gives you the most optionality. Period. Full stop. It's there's a synonym, corporate finance. Corporate finance and investment banking are the same thing. People confuse that. They think working in the finance department at a corporation is corporate finance. It's not. But that is the best job that you could possibly get, period, full stop. Now, I do have piece of advice. It is the mantra of my Road to Wall Street program. Where you start is not where you're going to finish. So no matter where you begin your career, what firm that is, what company that is, like don't put too much credence to that. And this goes both ways. Just because you start your career at Goldman Sachs doesn't mean you're going to take over planet Earth. On the flip side, if you're not working at Goldman Sachs, it doesn't mean you like failed at life. So I would say acquire skills and then figure out along the way what you want to do. That's really the thing. So there's certain things you're going to do that like really light you up. I really liked valuation. I really liked building financial models. I was like, wow, this is pretty cool. Like I could make a lot of money doing this if I like actually applied this to finding companies to invest in. Like, mind blown. So that stuff will develop over time and you'll figure out pretty quickly what you enjoy and what you're good at. So that's really the perfect Venn diagram is, what am I good at? What do I like to do? Find that overlap as fast as possible. That is the key. Sorry, this scroll bar. This thing drives me absolutely nuts because it's like the width of a human hair. It's so annoying. Almost sold my Tesla for 35K in profit, but still holding my 100 shares. Smart on you. Smart on you. I almost did the same thing and I would have regretted it. Now, if you go back, okay, because I'm a big fan of like, take people to task. So in my Tesla video, I said, if you don't already own Tesla, don't buy it. If you own Tesla, okay, if you own Tesla, don't sell it, hold it. And this is a perfect exact reason. You always want to buy at a discount, but ultimately when you sell something, it should be because there's been like a divorcing of fundamentals. It's like way beyond a reasonable valuation. So, you know, at some point tonight, we'll probably end up talking about Oracle, right? When Oracle went up 38% in one day on the OpenAI announcement, I was like, this is stupid. There's just like no logic to this at all whatsoever. Because again, valuation, you would have to say that all the future cash flows increased to such an extent to justify a 38% increase in the underlying intrinsic value. Not the case. Remember, revenue is what you make, net income is what you keep, all the stuff we talk about in the videos. So at the end of the day, just because they're getting this new revenue source doesn't mean it's like automatically inures to value. And then ironically, Oracle's come out and said, hey, we're delaying the data centers and stuff like that. So if I said, I'll give you $1 billion, it's like, sweet, that's awesome. But I didn't tell you like what the stipulations are of that. You shouldn't start like spending money as though you have $1 billion. It's very, very different. So yes, I'm glad you didn't sell your Tesla. You know, the whole thing would be like, if you feel you have an over allocation, you have 50% of your portfolio, okay, maybe you want to trim it a bit, but I see no reason to sell. I think there's more risk to missing out on that upside potential than there is on, you know, it going down. So very important to take that perspective. That's portfolio management. You know, what to buy, when to buy, like, that's pretty fundamental to what we're talking about. But I would say net, really, when you break it down, holding and selling, that's where the value is. I mean, most people don't want to hear that, but no one's ever made money buying a stock. You either make it by holding it or selling it. That's really the only way. I started my own not really financial channel, just talking about investing. I'm not good enough to tell people what to invest in yet. Do you write a script or just off the dome? I mean, I could do both. I would say to avoid rambling and going on tangents, which is something that I love to do, because I'll find something that's really interesting at the time and I'll just go down this rabbit hole. A script is going to be very helpful for you to avoid that. And I would say starting out, you know, have a topic that you want to discuss, have some bullets that you want to go through and kind of go that route. So there, it's funny. I'm thinking back to my business writing class in Rutgers, and the way that we were taught how to write was tell me what you're going to tell me, and then tell me what you told me. And a really good rule of thumb is 3. Have 3 main points that you're going to talk about. So if you think about it, even with the YouTube videos, even though there's like a lot of structuring that's going on there, I'm giving you an update of the most recent results. I'm looking at the financials to see if there's any like gold nuggets from there. And then like the valuation / recommendation. That's kind of like the 3. Now it's broken up in the video into a bunch of more granular pieces, but that's what I would say. And I think the other thing is just be your authentic self. So you said, I don't know a ton about finance. That's okay. You don't have to, but be very clear about what it is that you're offering in terms of value. So I would say if I were just starting a finance channel, I had no finance background at all whatsoever, I would really cover things that I would find interesting and, you know, different news and, developments and stuff like that. That way you're kind of more synthesizing for people rather than like I'm an expert bringing my expertise. I think that would be a good approach if you're just starting out. The thing that like drives me insane with most finance YouTubers is they're like, you should buy this stock. And it's like, why? Why should I buy it? Because you said so? Like, who are you? Like, what's the significance? Nobody does a valuation. No one understands what actually drives value. That's the type of stuff where I'm just like, this is ridiculous. So just be authentic and then figure out, you're going to find kind of your lane that you can like really develop. And that's what I would do. But I would say just starting out, just riff, go with stuff that you're interested in and roll that way, man. Do it. All right. So scroll bar. Hey, what's up, Pratouche? Are we got a big one here? Hold on. And the scroll bar just went. Merp. All right, so let's get back up top. I had there's a big thread going on here of questions here. Okay. Since it's that time of the year, don't you think almost everyone should try to act as their own agent when getting life insurance? Commission, from my experience, is $900 a year for one family. Licensing costs about $200 to $300. It's a good way to gain knowledge and get a bit of money, and possibly a side hustle. Health insurance, not life insurance. Sorry. Yeah, so life insurance, I have a buddy who sells health insurance, and like the window closes, I think today is when it officially closes, the 15th, where you have open enrollment. So it opens, I think, like October, and this guy is just like, what, to the wall. There's a real niche area of insurance that I think is cool, title insurance. Title insurance is the only insurance that covers backwards rather than forwards. That one is kind of a no-brainer. So, it's a tough business because, yes, everybody needs health insurance. Everybody needs car insurance. You could argue everybody needs life insurance. Yes and no. Depends, if you have people that are dependent upon you. But net, health insurance, again, going back to the whole United Health conversation, blah, blah, blah. It's one of those things where it's a very short window. You're a price taker, I mean, do I want to sit around and explain different health insurance options to people? No. I went to the dentist today, okay? Got my teeth cleaned. I'd rather do that for 8 hours than explain insurance options to people. That's just me. I'm not everybody, obviously. Everywhere I go, I always ask and push younger workers starting out to please start a 401k. Yes. And take advantage of any match. Yes. High school taught me about that financial stuff. Dude, okay, let me go on a little tangent here. It's absolutely insane that this is not just like taught straight away. And again, I'm coming from like a family, like no finance background at all whatsoever. At the very least, give to the employer match. It's free money. It's the only guaranteed 100% rate of return you'll ever get in your life. Now, I've done this before. I'm going to do it again. So you can literally, I'm just going to piggyback off of this point here and just show you very simple math with this, because if I can help you in any way, aside from, learning about finance and investing and all of that stuff. So check this out. You're going to get paid bi-weekly. All right. Let's say you make $50K. All right. So every 2 weeks, so divide that by 26, you're getting 1923. All right. So let's say from that, you find a way to like scrounge and you contribute 500 per paycheck. All right. So let's follow the bouncing ball here. This is just bond math, but it still stands to reason. I just want you to see like the real of the potential value that you can create just by doing what my friend just mentioned. All right. So let's say you start working and you're 21 and you're going to retire at 65. Okay. Now, where people get confused here is even though 65 minus 21 is 44, you have to add 1. And the reason you have to add 1 is you need to include that first full year. So that's actually 45, all right, times 26, all right? That's the number of periods that we're talking about here. Now, if we say the S&P 500, VOO, that's 10.4% historical return annually over the last 70 years. But we have to divide that by 26 periods, okay? You're starting out with nothing, and you're going to have this 500 payment, all right? And again, just follow the bouncing ball here. So FV, we got the rate, we got the number of periods, we got the PMT, we got the PV. Bam. $13.22 million. Okay. Now, it's going to get even crazier, friends. Okay. It's going to get even crazier. So just bear with me one moment. I just need to clean this up. All right. So let's see. That times 26, that's only 13K. Now, you could actually make this the max. Okay. 23,500 plus the employer match. Now you're talking about like bananas numbers. Now, again, I know it's very difficult starting out to be able to get that, but net, if you were getting on average a 10.4% annualized return, 45 years, you get paid biweekly, so 26 times over that time frame, you're talking about $13.22 million. Now, I will give this advice. Let's say dollar cost average, S&P 500, VOO. And then the most insane questions get asked. What about a momentum fund? What about an S&P 500 momentum ETF? What about, I read about this one thing, they generated alpha last quarter. Like, dude, what are you talking about? Just frickin' dollar cost average in the S&P 500. It's like the easiest, biggest no-brainer ever. So yeah, I'm 100% with you with that. That to me is insane that people will not. And I've heard all the logic, right? I'm going to be a millionaire. I'm going to be a billionaire. Okay, dude, awesome. I'm all for it. Rock and roll, become a millionaire, become a billionaire. But would you really complain if you had $1 billion and then 13 million on top of it? I don't think people would complain about that. I don't think we could complain, right? But I'm glad you went to a much better high school than I did. No offense, high school. But yeah, that basic personal finance, and truth be told, we don't even teach basic personal finance in like the business school. Like a business school curriculum does not teach that. I'm talking about beyond, balancing your checkbook. Like, who actually has a checkbook anymore? But this type of stuff is just so fundamental. It's crazy. It's absolutely crazy. So be curious, crush whatever they give you, and ask for feedback, 1,000%. How do you go about asking for feedback when you keep getting good job from your super advisor? Good question. So when your supervisor just says, good job, you're doing a good job, keep up the good work, say, okay. What that means is that you're doing a sufficient job at the task that is being given to you. But what you want is, how can I get better? All right. So imagine, for example, let's use baseball or basketball. Okay. Play defense. All right. They put you in the game. You play defense. They're like, good job. You did what they told you to do. You went in the game. You played defense. But if you said, I want to be the best defender in basketball history, how do I do that? That's completely different. So good is like, check the box. You did a satisfactory job. But to try to be the best, that is a whole different proposition. So I think that is what you want to do with your supervisor. Say, hey, I just want to try to figure out from your perspective how I can improve, how I can get better. And if they say, no, you're doing a good job, you say, no, I appreciate that. Thank you. I appreciate that. But how can I be even better? Like, what can I do to improve? That is what I would do in terms of feedback, specifically asking. I want Tesla to drop. I didn't have money to put in when it dropped. I can only work part-time. I'm 15. Yeah, so I would say, if I were 15, dude. So crazy story. I was like cleaning up and stuff, and I found from college, we had this student investment fund. Okay. So a student investment fund, and I just looked at like the statement. All right. And you would lose your mind if I told you what was in there and the prices that they were at. Apple, Netflix, Apple like $20. And this is at like pre like 8 splits. Netflix, $50. Like just like stupid stuff. And the problem is everybody says, "Oh, sell." And you think to yourself, you're like, "Oh my gosh. Oh my gosh." I mean, I remember I always look at Google. So Google, Alphabet, IPO'd when I was working on Wall Street. And everybody knew like this is an amazing company. It's going to go to the moon. It's the best search engine by a long shot. I think it 148x'd since the IPO. Now, there's a lot of people that bought it, sold it, bought it, sold it, bought it, sold it. But if you just bought it and held it, that's it. Just bought it and held it. You'd be far better off. So again, the key is when you're talking about buying and selling stocks, the only reason you should sell a stock if it's just significantly overvalued or the actual business has changed, the fundamentals are like going the wrong way, like it's not the same business, there's deterioration, that would be a reason. But outside of that, pick great companies and hold them forever. That is like really, really important, really important. But again, I would say if you're buying VOO, you're getting Tesla. So just think about it like that. That's the way I would think about it. But I mean, dude, at 15, I mean, if you bought one share of Tesla and I saw a thing on Reddit and it was a guy that said every day, I think it was every day for 8 years. Does that sound right? Every day for 8 years? Yeah, it sounds about right. I think he said every day for 8 years, he bought $30 of Bitcoin. And like the total investment, let's actually do the math here. So, because that would be 900 a month. Yeah, that sounds about right. 30 times 12. Yeah, okay. So he said my total investment is $80,000 and the actual amount, the value of that is over $1 million. So he's like, I have over $1 million of Bitcoin by buying 30 a day. Here's what I did. So that kind of speaks to the whole dollar cost average thing. And that is what I would say. Find stuff that is like phenomenal, like a great company that you want to own. And when it pulls back, buy one. I mean, in your case, like at 15, you could go into like Robinhood and buy fractional shares. So I would take that approach. Don't let the like dollar amount preclude you. It's not like that anymore. You could totally invest in like whatever, $10, $15, whatever you have, 100%. Yes, I did hear rumors of that. What price do you think you'll sell your Celsius? I mean, the intrinsic value that I had on Celsius, I think was 78. So let's call it $80. I mean, if it got above that, I'd still have to see like the trajectory, because one of the things that happens is every time you update your valuation, ideally the intrinsic value should be increasing over time. So if you did a valuation previously and you got a value of 80, that doesn't mean like if it hits 80, you sell. That means, oh my gosh, it hit 80. I need to update my valuation. Now, if it's still at 80, you're like, okay, it hit fair value. At that point, you have to kind of make a decision. But ideally, like I've been looking back, we've been covering the Mag 7, Meta, Microsoft, Amazon. And I've looked back now, I've covered it on the channel anywhere from like 5 to 7 times for each of these. Every time the intrinsic value goes up. So it's as long as that is happening, you wouldn't necessarily sell it. Now, I have said, I think Celsius will end up being bought out by Pepsi. I think that's the long-term play there, but I wouldn't just sell it because it hit a particular price. If it was beyond the intrinsic value and I thought, you know what, like this is, hit its break point. But I think Pepsi will probably buy them out at some point. But right now it's trading for like, 55, 60 cents on the dollar. So it's very far away from the sell point. Just got here trying to catch up from the beginning. Game for stock market, stayed for the career advice. There we go. Yeah, I mean, the career advice stuff is huge. The stock market stuff is honestly, and I would say for the vast majority, don't be like offended or anything like that. I do training for multi-billion, like some cases, multi-trillion dollar entities. And I'm going to give you the advice that they give to people that have a net worth of $10+ million. Okay. They have a core satellite strategy. The core of the portfolio is like 80 to 90%. That's like your foundation. That is VOO. All right. Now, if you're significantly older, closer to retirement, you're going to have some fixed income in there, but it's basically VOO, S&P 500. The other 10 to 20%, that's the satellite. That's like what we do on the channel, individual stocks, maybe real estate, private equity, hedge funds, what have you. But, and you don't have to have a $10 million net worth to hear this, dollar cost average in the S&P 500. The thing is, it's easy to do. It's easy not to do. It's kind of like having a good diet or exercising. It's easy to do. It's easy not to do. But if you actually look backwards, if you would just buy VOO once a month and you go backwards, I mean, let's go look just out of curiosity. I keep doing this on my phone. I should do it on the screen. Let's just see, out of complete curiosity here, friends. Let me find an open. All right. So I'm just going to do S&P 500, 10 years. Let's see. S&P 500, 10 years. So I'm going to Yahoo. Let's do, I need a clean Yahoo. Finance. There it is. There you are. All right. So I'm going to share the screen so you guys can see this in real time. And this, I know you're like, well, what does this have to do with SpaceX? Everything. All right, so let's check this out, y'all. Where'd she go? Give me the S&P, yo. The CAC. No. VOO. There we go. Let's just keep it simple. All right. Let's do all. All right. What is this? Is this Tesla? Is this Nvidia? No, it's just the S&P 500. So it's 2025. Let's go back to 2015. No. 10, 11, 12. Okay. So 186.93. All right. So let's do the math there. So let's call it 626, 626, and let's call it 187. Okay. So that's a 3.3x. 3.3x. But you have to remember it's compounding along the way as well. So if you have that 3.34x to the power 0. Yeah, that's a 12.8% annualized return. Like, so the problem is people look at Nvidia or, fill in the blank, stock that has popped and they're like, oh, I missed out. It's like, dude, you could have gotten over the last 10 years a 12.8% annualized return. I mean, think about it. Rule of 72. 72 divided by the number is how long it takes to double. You're basically talking about doubling every 5.5, 6 years. Like, that's insane if you could do that. And also, just so people understand, family offices. These are people that are like decamillionaires, centimillionaires. The average return of a family office in the United States of America, 7.2%. So you're like, well, why isn't it 12%? Because they don't want the risk and the volatility of the S&P 500. But you could generate a better return than what the average family office does. So it's like, why wouldn't you? That's the whole thing. Now, again, I've told this to people previously. I wouldn't really be able to have a YouTube channel if all I did was a dollar cost average in the S&P 500. But at the end of the day, that's what you should be doing, dollar cost average in the S&P 500. So, I mean, SpaceX going public, there's Rocket Lab. Be careful, though. I think it was Virgin Galactic. The stock went to like $2,000 per share, and now it's no longer with us anymore. It went to freaking zero. So that's the type of stuff that you have to be careful with. Again, I would say like it's like a Joby. You want to like throw something at it, go for it. But I would not be investing in SpaceX if I don't have VOO. I was looking at it the other day. I was like, how much of my portfolio, because I'll say at the end of the video, it's the number 1 position, the number 2 position. And like VOO is number 5. It's the 5th largest position in the portfolio. And it's just like, dollar cost average. Just keep banging that, All right, let's see. What skills beyond financial modeling are needed to get a job on Wall Street? So those would be what we call hard skills. I would say the soft skills. So being the type of person that people want to be around. That is something that I think is probably the biggest struggle nowadays. So I'll ask my students, I'll say, hey, what do you like to do for fun? And they'll say, build financial models. And I'm like, dude, what? Come on. That is not the right answer. That is like a guaranteed ding. So you're telling me that if you were on a beach, tropical beach, beautiful turquoise blue water, you'd be sitting at the bar asking for the Wi-Fi password so that you could build a financial model? Huh? That's the type of stuff where it's just like, come on. So especially something like investment banking. I mean, frankly, any job, not just investment banking, you're going to be working more than 40 hours a week. Newsflash. So if you're the type of person that people are like, oh my gosh, it's frickin' Ken. He's always negative. He's always complaining. People are just going to dread that. They're not going to want to be around you. That is incredibly important. By the way, that is why banks have internships. Banks have internships so they could basically try before they buy. They want to test out and see, like, are you the type of person that they want to be around? And if the answer is no, it's like, adios, take care, brush your hair. That's what they're trying to avoid at all costs, is hiring people that net end up being a disaster, because that is just going to be a pox on the entire group and something that nobody wants. Ooh, is the S&P 500 going to grow forever? Excellent question. Let's think about this. Are companies in the S&P 500 going to continue to make more money? I would say yes. Are they going to continue to have a growing customer base? I would say yes. Are they going to continue charging more for their products? I would say yes. So based on that, yes, it will. So fundamentally, yes, it will continue as long as we're here and there's not like robots take over via AI or some sort of like nuclear holocaust or something like that. Yes, the S&P 500 will continue to grow forever. Top 10 stocks for 2026. I mean, this is one of those questions that this sounds like, honestly, it sounds like a YouTube video that would like pop up on your feed and you're like, oh my gosh, the top 10 stocks for 2026. I would say, what are the top 10 stocks to own forever? And I think that's a more fundamental question. Maybe you'll buy them in 2026, but I think stepping back, taking an investing approach rather than a trading approach, I have no idea what the top stocks will be in 2026. No idea. Do I have an opinion? Not really, because I buy stocks that are trading at a discount to their intrinsic value, and I know that they're going to continue compounding, and they have an amazing competitive advantage, basically the whole Mag 7 effectively. And then, you sprinkle in some other ideas within there. So the top 10 stocks in 2026, no idea. But, and that's the other thing. You need 10. Stocks are going to continue to proliferate and move forward, but I would say buying at a discount is going to be more important than picking like the stocks that are going to be like the hot stocks for 2026. And I would say the ones that are going to be like superior outperformers, we probably don't even know about right now because of how quickly technology is advancing. Tesla has many businesses. How to balance the valuation of the different businesses? Excellent question. Tesla is very difficult to do a sum of parts analysis on, but it is the right approach. I'm always fascinated that people will say, hey, my issue with Tesla is it trades at a premium to Ford. And I'm like, yeah, it should. And they're like, no, but it's a car company. I'm like, well, partly I look at it more as a software company that happens to also make cars. And, you go through this back and forth and it's just like bonkers. I think you have to look at the potential of the things that Tesla is currently engaged in. Full self-driving cars, humanoid robots. So the potential market size for each of those has been put at about 5 trillion for humanoid robots and 10 trillion for full self-driving cars. Even if they get a small slice of it, I think they're going to get a very big slice of it. That will be a massive increase in value for the company. So that is what I would say. But net, what you really have to do is think about it in terms of the component parts. I think the part that people are missing with Tesla is the energy storage piece and the services piece. That's what everybody's completely whiffing on. And those are the two highest growing pieces. I think one's growing at 25%, the other's growing at 35%. That's going to be larger than the EV business. 5 years from now, selling electric vehicles will be the smallest part of Tesla's business. You can go write down the date and time on that one. I 100% believe that within the next 5 years, no question. It'll probably be like a third, 30, 40% of the business, maybe. But that's my take on that. All right, here we go. Next one. Bam. Aside from IB, what are the next group of finance jobs that can help you obtain the skill set in your opinion? So what's actually interesting, through Road to Wall Street, we have a board of advisors, and we were talking about like what's an area that is a tremendous growth opportunity that people are not focusing on. And it's actually an area called prime brokerage. So prime brokerage is effectively what facilitates a lot of what goes on within an investment bank. So for example, when you have a super large financial institution, let's take an insurance company that has hundreds of billions of dollars of assets under management, they're going to need the function of the monitoring of all of that. They're going to need the function of, performance calculation, potentially like funding for some of these investments, all sorts of different pieces. That's really what prime brokerage does. So if you want to like really simplify it, a hedge fund. So if a hedge fund engages with a major investment bank, what they're going to do is they're going to need a whole host of services. So they're going to want someone to monitor their holdings. They're going to want someone to give them actual performance. Also, they're going to want to get exposure to particular ideas without revealing themselves. So a lot of people don't realize this. Investment banks through prime brokerage, what they'll actually do is they'll create synthetic positions for hedge funds. So let's say I had a hedge fund. I'm like, I want to own 7% of Fannie Mae, but I don't want the market to know that. Well, what would happen is if I go buy 7% of Fannie Mae, I'm going to have to file a 13F or 13D filing in that case, where I'm going to have to show, hi, I own more than 5% of the company's stock. But I don't want to do that because I don't want anybody to know that I own it. So then what I'll do is I will approach JP Morgan and I'll say, hey, JP Morgan, you're my prime broker. What I need you to do is create a synthetic position. And they could do this. This is going to go like way on a tangent here. So massive heads up. But you would create what's called a swap. So what I would do is I would engage with JP Morgan. They would effectively, buy the shares synthetically. So they would give me the cash flows associated with the shares, and then I would, pay them for that. But they would be the owner of record of the shares, but I would have it through the swap. So something like that, I know that's like minds are melting, brains are exploding on the keyboards right now. But again, without getting into like too much detail, that's the type of thing that prime brokerage offers. Leverage. So a hedge fund wants to take a levered position in a company. They're going to approach an investment bank for that. That function is prime brokerage. So that's something that's very high touch. That's something AI is not going to do. And I know when the AI bots take over and they're holding me hostage, they're going to cite this from the live stream as they remove the life from my body. But I think that is one of the areas that you need to pay attention to, because that is definitely not going away. And it's a really cool niche area. I have a lot of students that'll go into prime brokerage, and then their customers are hedge funds and private equity firms. And then they'll end up working for those firms in like kind of an IR, investor relations type capacity. Boom, boom. Quick story. I love quick stories. My mind was blown back in 2021 when my Costco stock was at 300, wasn't moving, and my cruise ship stocks were cruising higher while the ships were docked. Yes, face turquoise covering eyes. That is true. So it's one of those weird things, and this is where FOMO kills people. So I reached out to a buddy, okay, who reached out to me in September. And he said, hey, what do you think I should do? And I was like, dude, just letting you know, anything I'm going to tell you, it's on you. All right. He's like, yep. I'm a big boy. I can handle it. No. I said, okay. I said, right now, if you want like a big no-brainer, the one that's going to win in AI. He's like, yeah. I said, Microsoft. Still feel that way. I will still continue to feel that way. He's like, okay. And then I said, you want one that has like some pretty good upside potential in a short period of time? He's like, yeah. I said, Lululemon. I said, okay. So here's the problem. FOMO, right? So if you go back, Lululemon, when we covered it in September, a little volatile, okay? It actually did bottom out, right about 160. So he was like, man, like he's texting me. He's like, man, this is volatile. I'm like, yeah, it's kind of the nature of the beast, but you're buying it at a huge discount. So who cares? It's like, all right. So now go backwards a few days. Lululemon reports freaking face ripping, right? 210. Now, remember, when I told him about this, it was at 160. So I reach out to him. I said, hey, haven't heard from you in a while. Did you see Lulu? And so there's like silence. So I'm like, okay, whatever. So I just went about my business, put my phone down. So he responds back. He goes, yeah, sold Lulu, bought Bitcoin. Not smart. And I was like, there you go. People are way too impatient for investing. Way too impatient for investing. Now, me personally, love it. Go be impatient. I will take advantage of that. So I'll give you, I'll be like the stereotypical YouTuber and tell you about something that I think is a kind of a no-brainer right now. So a stock we've covered multiple times on the channel, SoundHound. All right. And as I say, SoundHound goes up and it goes down. And then guess what's going to happen? It's going to go up. So SoundHound has absolutely eaten it, okay, over the last 3 months. All right. It hit 52-week high of 25. all right, back in 2 months ago, and now it's back in the toilet, 1079, all right? You could buy this somewhere in the like 1050 range average cost and just don't look at it. Sometime in the spring, it'll just like catch fire again, and it'll go 15, 16, 18, 20. And then you dump it, and you just got 100% return. Now, I'm going to say that, and nobody's going to do it. I'm going to do it. But if you look backwards, I'm looking at the last 6 months, okay? So in the last 6 months, here, I'll pull it up on the screen. I'm bad with the whole, I got to work on my live stream skills, y'all. All right, so let's look up SoundHound, and I'll get to everybody's comments in the chat and all that jazz. SoundHound is like it's like a bad girlfriend. It's like the most toxic, volatile relationship that you will ever be in. All right, so let's go backwards. All right, so we've got, ironically, around Valentine's Day 2025. All right, $15.25. Then let's see where it goes down to. Bam, 718, cut in half in less than 2 months. Then let's say you bought it at 718, bam, goes to 1176. Let's call it 12 amongst friends. So you see it went down 50%, then it went up 60%, and you just see this trend with this thing. It's just absolutely bananas. August, it hit 1650, let's call it 17. Then right here, down to 12. All right. You're like, oh my gosh, it's the worst stock ever. And then it's like, oh, bam. Look up here. 22. And now it's back down into the toilet. Now, that is an example of a stock that I would totally trade. That's a stock I would trade. That's not a stock that I would, say like, I'm going to hold for the long term. Did I even share the screen? I don't think I shared the screen after all that. Bad. But yeah, like, look at this thing. All right. So you've got right here, where is it? 15 down to 7, cut in half, then up 60% to 12. I mean, this thing is just like peaks and valleys. So it basically goes up 50%, down 50%, up 50%, down 50%, like without fail, constantly. That is the type of thing that you could just go back and forth with like crazy. If you like have to trade, you're like, I need to trade. That would be the one to do it with. It's absolutely like volatile is the understatement of the century. Hold on, let me scroll back, y'all. I'm going to share more thoughts on Lululemon. I just saw the last comment here. I went back to what you said about Celsius. What would happen if Pepsi bought Celsius? What would happen to our shares? Dude, they would freaking go parabolic. Here's the thing that I think people are kind of missing the boat with Pepsi and Celsius. Pepsi has a massive exposure to Celsius, massive exposure. On an as converted basis, it's like, 15, 20%. They own the whole distribution of Celsius. So they're going to know the good, the bad, and the ugly. So they are going to be able to extract the most value. The value of Celsius to anybody other than Pepsi is not even comparable because they're in the Pepsi distribution network. That is where the value is. They're on the same shelves that Pepsi has access to. That is really the value. So at some point, Pepsi might say, you know what? I'm going to buy Celsius. Well, if you're going to buy Celsius, you're going to have to pay a premium. And that means you're going to have to pay above what the current share price is. And it's going to be based on whatever the intrinsic value is. So if we have an intrinsic value of 80, you're probably talking about 15, 20% above that. I'd say probably close to $100 a share. That's realistically today what they would have to offer. That's what they would have to do. Yeah, it would be bonkers. I mean, it would be double what it is today. I've been nibbling on Comcast, huge discount plus big dividends. Yeah, Comcast is not a bad one. If you really look, it's interesting. Verizon, AT&T, Comcast. So AT&T like popped after being in the doldrums for like 2 years. It just ripped. In that same time frame, Comcast pulled back. I think the counterpoint to Comcast is what is going on with content and streaming. That is kind of the counterpoint. That being said, I just don't see traditional cable going away. But that is you're not off base with that thought process. Do you place more emphasis on different financial metrics based on the company's pre-profit versus profit? Yes. Random examples. So great question. So if a company does not generate profit, you can't price it off of an earnings multiple, like a PE multiple. So you always have to go higher up. The real keys are going to be sales and EBITDA. Now, what happens is sales is going to be the most stable. There's not going to be like massive fluctuations with sales. EBITDA, you can have a lot of wiggle room, especially if they have restructurings and stuff like that. So I would say you're going to see the most consistency if you do it on a sales basis. But I would say either sales or EBITDA is typically what I'm looking at. If it's a profitable company, I'm looking at EBITDA. If it's not, I'm looking at sales. It's like SoundHound, you're going to do it off of sales. Meta and everybody else, you're going to do off of EBITDA. That's the way to look at 100%. Let me scroll back. And when I opened my Fidelity Youth account, it was 2 weeks before tariffs. Oh, wow. Went up until 2 months ago. I'd put like $100 in stock, rest in S&P. Yeah, good. See? This is how you learn, folks. What do you think about silver and gold? I'm like Yukon Cornelius. Silver and gold, silver and gold. If you watch Rudolph the Red-Nosed Reindeer, you get the reference. Look, they are... Normally, they have a very close relationship, silver and gold's been ripping and silver's kind of lagged. So that relationship divorced. Now silver's starting to catch up. Again, if you're going to like trade, yeah, I guess you could go that route. I don't typically trade. I gave the example of SoundHound, though. That would be, I would say, more of like an exception. But net, it's really more of a hedge. It's a hedge against downside risk. It's a hedge against inflation. What's going on with gold is very different than silver. So a lot of what's happening with gold is you see sovereign buyers. So the first 2 quarters of this year was the largest purchases of gold by sovereigns ever. And that was actually eclipsed in the most recent quarter, 3Q. Why is that? So the move away from paper fiat currency into hard assets, that's really what is going on there. So it's really a supply demand issue at that point. Do I have any silver or gold? No, I do not. But you know, there's no cash flow associated with it. So that would be the only thing I would, say. 1 to 10% of a portfolio. You could do that. I mean, also there's the consideration of like physical gold, especially if you're worried about end of days and all of that stuff. Although I would say to myself, like, if AI and the robots are taking over, I don't know if I want to be hanging around for that. Now, obviously, as a human being, you have the will to survive. But I mean, am I going to be like bartering cans of beans and bars of gold and living in a bunker? Probably not. Probably not. But that's the story with silver and gold, more so a hedge. Tesla Semi. Yes, Tesla Semi is going to be big. I forget the name of the company, but there was an EV company that made self-driving trucks. And of course, they went out of business because they don't have enough capital for the runway. What price should I target Tesla at? To buy, I think when we did the last video, the intrinsic value was like 408. So I think I had like 403 something. I'll give you an exact number based off of that. So let's see, 408 divided by 1.2, 340 to 350. Now, it might not get there, but the idea is as time goes by, the intrinsic value should increase. Right now, it's a little frothy. I wouldn't just dive into it. If you don't currently own Tesla, this would not be a good entry point. I don't think this would be a good spot to enter in. Do you believe the market is weak, semi-strong, or strong? Semi-strong. Is there even a point in analyzing stocks if the market is at least semi-strong? Yes. Then only insider knowledge would allow for higher returns. So I think you're confusing strong and semi-strong. So strong is there's no way to outperform the market, just own the market. Every stock is going to generate its expected return based on the capital asset pricing model. That's effectively what that world would be. I do believe that it is semi-strong efficient, but what I've noticed is there's typically overreaction on the upside and the downside to news. And I think a lot of that has to do with the like trading algorithms that are in the market. But not only do I believe it, but research has shown that the market is semi-strong form efficient, not strong form efficient. Strong form would be only insider knowledge would allow for outperformance, generating alpha. But we know that that is not the case. Otherwise, Warren Buffett, Bill Miller, people that have outperformed over a long time wouldn't exist. Everyone's saying rotation away from Mag 7, but I'm thinking of doubling down. Amazon and Meta. What do you think based on what is being said? So you have to remember, we, okay, as investors, operate very differently from hedge funds, asset managers, insurance companies, pension funds, etc. So I don't know about you, but I could care less what I do on a quarterly basis. I don't care. Now, if you're an asset manager, you're getting judged on a quarterly basis. Did you beat or lag last quarter? So you're only as good as your last quarterly performance. Those are the companies that are rotating out of the Mag 7 and stuff like that. So they're trying to figure out what's going to win next quarter. I think this is an opportunity, a buying opportunity for a lot of these Mag 7 companies that we've covered on the channel because they have pulled back. They're below their intrinsic value. I mean, geez, Microsoft's at a 42% discount to its intrinsic value. I mean, you talk about data centers, right? They literally have the most data centers right now on planet Earth. Built. Like, so you're talking about all of these other entities that are like, yeah, we got to spend a lot more CapEx to build data centers. Microsoft's like, yeah, we built them. They're already operating. They're done. So, you know, that to me is kind of no brainer. So yeah, Amazon, Meta, Microsoft, I think are three no brainers. Tesla's a little frothy right now. Google Alphabet's definitely frothy. Apple, I'm still like, I don't know what the deal is. They're overvalued, but the stock just keeps going up. That's not a reason to buy it. You know, but you know, that's the key. But yeah, the three you mentioned, I think, make a heck of a lot of sense. I got the scroll bar going here. Hold on. Oh, here we go. Hi, Ken. How are you? I'm wonderful. Very much looking forward to the semester being over and grades being submitted. What is the point of hedge funds if most underperform the S&P 500 before fees? Sorry that I'm reading it in this voice. After fees, they're even worse. It just seems like an inferior investment. Yes. So the point of hedge funds is people want exposure to entities that are existing to generate alpha. It also is a diversification opportunity. So really what a hedge fund's trying to do is, and again, it depends on the type of hedge fund. So there's some hedge funds that are equity market neutral. All right. So they have zero exposure to the market. They have a beta of 0. So what they're trying to do is short things that are overvalued, go long things that are undervalued. I have a good friend. That's what she does. She runs a long, short macro strategy hedge fund. And we talk all the time. And like, I could show you on screen, you know, how she monitors her portfolio. It's like these are my long ideas, these are my short ideas. And then you basically just take the betas of all of them, and at the bottom you get zero, which means it's equity market neutral, has no exposure to the market. That type of hedge fund is not trying to beat the market. It's just trying to generate a positive return at all times. The idea here is you're trying to generate a Sharpe ratio above 1, basically a positive risk-adjusted return. That is really what the play is for that type of hedge fund. But then you have other hedge funds that are pretty much just investing long only in stocks, and they're using leverage. That type of hedge fund is trying to beat the market benchmark. But net, I would say there are some that have had significant outperformance. All you have to go look at is James Simon's Renaissance Technologies, and he had like a 40% year-over-year return for 30 years. Made Warren Buffett look like an idiot. A hedge fund like that, like they literally stopped taking investors. They returned money to investors because they had such incredible returns. So I would think about what type of hedge fund you're referring to. But yes, there's a classic bet that Warren Buffett did with a fund of funds hedge fund. And he said, let's bet $1 million. We'll do a 10-year bet. It was in 2007, I believe. Said 10-year bet. I'll invest in the S&P 500. You do whatever you want. And whoever wins donates to the other person's charity. And the hedge fund guy was like done, like cooked, less than halfway into it, because he put a lot of leverage into a few ideas. They underperformed. And what you have to understand, once you're down, you have to take on more risk just to get back to baseline. The best thing that could ever happen is if you never lost money, which is Warren Buffett, right? Rule number 1, don't lose money. Rule number 2, don't forget rule number 1. So to generate these positive risk-adjusted returns is incredibly difficult, incredibly difficult. And this is why 98% of professional money managers underperform the market over a 10-year time frame. So why would you try to take that 2% chance to beat it? I totally agree with you. I totally agree with you, 100%. I think that makes a heck of a lot of sense. That's what I effectively preach. What are your thoughts on the nuclear energy sector? So it's getting a lot of buzz because of data centers and AI. The problem is it just has a very, very long cycle. It takes about 10 to 15 years to build a nuclear reactor. 10 to 15 years. Now you're like, oh, we'll speed it up. I don't think so. The regulations that are involved are incredible. Now I've heard of small nuclear, compact nuclear, that type of stuff, but it's not really going to be the solution. What's going to happen, and I mentioned this in previous live streams, you're going to see massive need for liquefied natural gas. And that's what's going to power all of these data centers. And it's just fate of circumstance. We just don't have the ability from an energy perspective to do anything other than that. I think at some point we will be able to kind of crack the code on nuclear and do it in a safe way to power these AI data centers. We're very far from it. Nuclear was vilified after the 3 Mile Island disaster in Chernobyl, and basically it was untouchable for 3-4 decades. You can't just avoid something for 3 to 4 decades and like snap your fingers and just like pop it back into existence. Just not the case. Very, 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 very difficult. Oh, this is great. See, I'm bad with this stuff. As I went to go click, the scroll went down. So yeah, this would be helpful. So I obviously am kind of like very inept when it comes to optimizing YouTube, hence why we only have like 12,600 subs. But where did it go? Merp. Comcast has too much debt. Oh, that's a fair point. Hold on. I missed it. Marp. This scroll bar is going to be the death of me. Hate it. Hold your fire for a second. Hold on. What's the point of hedge funds? What is the point of hedge funds? Oh, yeah. See? Here we go. Request to everyone watching, like the video. Yes, please. I'm bad with that. At some point, I'll figure all that stuff out. It's like, super like, whatever. I don't know any of this stuff, which is probably why I have 12,600 subscribers. Yeah, so please do that. Like. Which one are you talking about? Rivian? I'm not talking about Rivian, but Rivian is definitely kind of hit a peak from a valuation perspective right now. I think that is something like if you own Rivian, now would not be the time to pile in more. If you don't own Rivian, I would not dive in right now. It's definitely going to pull back. For some reason, it just like caught fire. That's one that I would say is definitely ahead of its skis right now. So Lululemon, I'm trying to show the comments as I address them here, friends. So I didn't share my thoughts on Lululemon. Full disclosure, I am actually looking at it this week. So be on the lookout on Friday. We're going to be covering Lulu this week. So I don't have an answer for you as of yet because I'm in the process. I can't tell you right now that it's like massively undervalued. It has ripped. I was talking about it earlier with my buddy who dumped it and bought Bitcoin instead because he was impatient. So he missed out on like a 30% run up. Ken, just want to say thank you for the Celsius analysis. That's how I found your channel. I spent 30 minutes trying to find a non-shitty analysis on Celsius. Good luck with that. Thanks, man. Yeah, like I don't understand like the finance influencer on YouTube when people don't have any finance background and they haven't worked in finance. I mean, I look at people's channels, 100,000 subscribers, and their description of their channel is, I started investing in 2017. This is my journey. And I'm like, what? That's insane. I mean, I could see that if you're like working out, like let's say you were like 150 pounds overweight and then you ended up losing a lot of weight and you chronicle your journey and you're an inspiration to people and you're like, look over here, I was a fat slob. I was a freaking fat slob. Look at me now. I'm a freaking beast. I'm all jacked up. And then you see like the journey and it's like, I'm a fat slob. Like, let me see what this person's doing. Like, I get that type of stuff. When it comes to investing, I mean, that is just bizarre to me. It's just bizarre. Like there's no basis. Like you have no background or basis in valuation, fundamental analysis, like how stocks get valued. Like I don't care of somebody's opinion. Like I don't ask people their opinion on stuff that they should not have any basis or valid opinion on. Like I'm not going to ask someone like, what's your favorite meal to cook? And they're like, I don't cook for myself. It's like, well, yeah, but what is your favorite meal? It's like, I don't know. I don't cook for myself. It's like, yeah, but if you had to, what? It's like, dude, I don't cook for myself. Like, why would you be getting cooking advice from that person? It's just nuts. It's just totally insane to me. Yeah, so I definitely do my best to produce non-shitty videos. So I appreciate that. Yeah, Huzefa, I can't tell you for certain what the price target is. All I can tell you, I have the model up right now because I was working on it before this. Right now, Wall Street's median, which is the midpoint, is 203. And the average is like 206. That being said, there's not the same level of coverage and people are updating their coverage, equity research analysts. So don't take that as, like fact. So don't take everything with that. Just kind of take that with a grain of salt. Comcast has too much debt. That's fair. Imagine and have a little fun. 10 years from now, how does the economy and financial system look? Circle, Coinbase, New Visa, and Mastercard, Bitcoin, Ethereum, the dominant currencies. I would say if we don't get our arms around the debt, that's going to be a major problem. I do think that what we're currently doing should help that. If we can get a 3.5 to 4% growth rate, we'll be able to grow at enough of a rate, assuming that interest rates stay low enough, that we'll be able to kind of wiggle our way out of this. I'm positive that the US is going to figure it out. I know a lot of people are bearish on that, but we have kind of history to prove that. Visa and Mastercard are a duopoly. I don't think you can go wrong investing in either one. The issue is they're never at a discount. They're always like pretty close to fairly priced. I'd say Mastercard is the one that seems to be a little bit more undervalued. I think the consensus is like 650 on Mastercard, and it's been like bouncing between like 540 and 570. But you know, are people going to like, is hard currency not going to exist? No, I think that's like ridiculous. But I think what's really scary is like 10 years from now, take all the currency stuff all out of that. Like, who knows where we'll be at when it comes to AI? I've heard the most insane stuff. People like uploading their brains to computer systems so that they'll never die. I'm like, what? Just total banana fest. That's going to be the bigger wild card than anything, I think. And I think that'll dictate a lot of what happens with currencies, the economies, and all of that stuff. Let's see. What do you think about this strategy? Hold on, there was a question on yields I got to hit. Dude, this scroll bar, if you just see like the screen just like smash into 1,000 pieces, that's what is happening. I just broke it because of this stupid scroll bar. It's driving me insane. What do you think of bond yields remaining at relatively high levels despite rate cuts? So again, remember, the market dictates what the actual rate is, okay? So remember, there's an inverse relationship between price and yield, okay? So as yields go down, prices go up. So there's a constant adjusting. What it really says is that investors want a greater yield than what the base rate is. And I actually listened to Jerome Powell when he gave his comments after the Fed meeting. And he said something very interesting. He said 3.5 to 3.75 is neutral, which I found very interesting. Basically, he said it's not stimulating growth and it's not slowing down growth. It's neutral. I was like, okay, that's interesting. So really what you're seeing with higher yields is that investors are requiring a higher risk-adjusted return to be exposed to the underlying treasuries. Net, what does that mean? They think that there's more risk than is indicated by the 3.5 to 3.75. So I say, I'll sell you this for 100 cents on the dollar. The rate is going to be 3.5. You're like, no. I'm going to give you 95 cents so that my adjusted rate comes out to, let's say, 4.2. That's what's really going on there. It's to give a margin of safety. And if you think about it, just brute logic here, if you want to beat inflation, and if you say historical inflation, 2 to 3%, you know, it's very difficult to beat it if you're going to be at 3.5%. So I think that's more of what's going on there than anything else. What do you think of this strategy based on Buffett's quote? Be greedy when others are fearful and fearful when others are greedy. Okay, I'm with you. So when the fear greed index, neutral buy, fear 2 times buy, 3 times fear buy, and then when greed and fear, yeah, I actually have a buddy who runs a hedge fund who does exactly that. He looks at the VIX, and I think he said if it's above 20, there's more fear than greed. And then I think if it's below 10, it's the opposite. Don't quote me exactly on that. But yeah, you could do that. That would be more of a trading strategy than an investing strategy, though. So if you were trying to figure out kind of like a short-term trade, like is the market overvalued and getting exposure, that's the way that you would do it. So yeah, that's 100% a legit way to do it. And my buddy is definitely a Buffett disciple, so I'm all about it. All right, let's see. We've covered this before. I don't mind covering it again. What are your thoughts on Uber? I feel like the sentiment about the risks of self-driving and robotaxi are misplaced, similar to the sentiment around Alphabet and AI a couple of months ago. Yeah, it's hard to tell, honestly. I think this is more of a qualitative thought than a quantitative thought. So, and again, we don't have clarity yet with this. Let's just be, on the same level here. I think if I can go to, and again, I'm not advocating drinking alcohol, but let's say hypothetically you did. I'm wondering if you have a full self-driving car and it drives you to the bar and it drives you home, what are going to be the issues with that? I don't know. The rules are not clear yet. Now, I have my uncle and godfather is a former police officer, and like he will tell you like all the rules, like were you in the front seat? Did you have your keys on? Like there's all these different stipulations. Right now, those are the rules of the road. So I would say that is an argument for Uber. Now, if there's a way that I could like sleep in my car and it drives me down to Rutgers, or I can like work while the car is driving, if that's like the reality that's in the future, I think that bodes very, very poorly for an Uber. Very poorly. I mean, at that point, like the only reason you'd use Uber is because you want to like BS with human beings, which is fine. I like BSing with human beings all the time. So that's kind of the point counterpoint there, which becomes a little bit challenging. I know Bill Ackman's a huge fan. I know a lot of people are huge fans of Uber, but that's kind of my counterpoint. That's where I'm not 100% certain of it. So again, it's like Buffett says, yes, no, too difficult to understand. Right now for me, the Uber it's just too difficult to understand. Yes, it's cheap. So is Lyft. But I think the uncertainty around full self-driving and robo-taxis, once that gets reconciled, then I will, kind of fall on one side or the other. But right now there's just too much uncertainty. Too much. I did not realize Microsoft was that big in AI. Dude, they dominate. They crush. They blow everybody's doors off. Don't even talk about NVIDIA without talking about Microsoft. Microsoft already has the data centers built. Like I put in the video, and I'm going to pull this up right now because it's just bonkers. Okay. Microsoft data centers worldwide. All right, check this out. I'm going to share this on screen. And I put this in the YouTube video. But again, because YouTube, everybody has like a 2-second ability to focus. So check this out, y'all. This is Microsoft data centers, okay? So Mexico, Central Mexico, South. Like, look at this. I'm going to just like spin the earth around here. All right. Australia East, Australia Central, Australia Southeast, per 30. Like all these dots are freaking data centers. All right. That Microsoft has right now in operation, all freaking over the place. Okay. This is insane. All right. Poor Africa. There's like 3, 2. But like, look at Europe over here. I mean, my gosh. Poland, Denmark, Sweden. I mean, this is just like, what the fudge? And then right down here, bam, we got some Brazil action. We got some Chile. So, and then you see all these things are connected here too. All right. Like when you talk about data centers and like, you got, Meta's going to build one in Louisiana. It's like, bro, who cares? Like, this is the world. I'm spinning the world, y'all. I mean, Microsoft freaking it's got it. It's like we win. So that's the thing that I don't think people realize. When you see that, and people are like, yeah, we're going to build out data centers. It's like, yeah, we got them already. What else? Well, any other questions? That's what like should really be your focus when you talk about AI data centers. I mean, they are dominating, and it's quiet. Like no one even thinks about it. It's just kind of like, yeah, we rock, we crush, yeah. Are you looking at some stocks that are undervalued? Always. Costco's trading at lows. I know. I own Costco. Not happy with it right now. CMG, Lulu have performed well. Is the consumer weak or slow? So I shared an article. I had to see where it was. That's why I'm pulling up my phone. I know I should be sharing on the screen. But I shared an article with my buddy. And okay, listen closely. The share of Americans planning on spending over $1,000 on holiday gifts is at an all-time high, record high. Okay. So it says more than 1/3 of Americans plan to spend at least $1,000 on holiday shopping this year, a significant increase from recent years and the highest share in at least 15 years. Okay. So now, when people say horrible market, horrible economy, horrible this, horrible that, I think it's a bifurcated economy in some ways. I love when people talk about the K-shaped, like that, like there's no like economic research that's been conducted on a K-shaped economy, but like the revolutionary idea is that people with assets benefit and people without assets don't benefit. Like, wow. It's like people who eat food don't die and people who don't can die. It's like, what? So I think Chipotle and Lulu. So Lulu, which I've been in the process of looking at, so be on the lookout Friday, 6 a.m. Eastern time. Lulu, if you look at the revenue per quarter and you go back 8 years, okay, revenue per quarter, every quarter it increases, starting with the first quarter to the fourth quarter. In fact, I'll look at it real time. 34% of their annual revenue is in the fourth quarter. Okay. 20% is in the first quarter. So you basically see this ramp. Now they just reported the third quarter. The third quarter is about 22, 23%. So they're heading into, we're currently in that huge quarter, okay? And they're not going to report on that until like March, April, all right? What's going to happen? They're going to freaking blow the doors off. Why? Because that's when everybody's buying their product. So when you actually look, and I would say I'm always a big fan of ask around. Data is important, but actually ask around. Like say to people like, hey, are you like, what are you spending on, the holidays this year? People are like, oh, I'm not spending anything because, I'm eating cans of tuna and ramen noodles. Oh, okay. And if you ask like 10 people and all 10 people tell you that, it's like, okay, well, there you go. But net, I don't think, unless people are spending money that they don't have, I don't think that's really the case. I really think that it's a little bit better than maybe like the news will tell you, etc. I think there are people that are suffering, like Gen Z has like a 40% unemployment rate, and that's multifaceted. But yeah, we could talk about real estate, so there's not enough supply, there's more demand than supply, but also prices across the board have come down about 5%, and that trend's probably going to continue. So that is kind of the challenge. That's really the challenge, is figuring out like the overall. But if you listen to Scott Bessent, who I do, and I think if you want to learn a lot, listen to Scott Bessent. Scott Bessent is a freaking genius. And his thesis is big, beautiful bill resulting in tax cuts. Those tax cuts will ultimately end up benefiting everyone 2Q 26. All right. People are going to get much, much bigger refunds. What's going to happen with those refunds? Obviously, they're not going to save it and sit on it. They're going to deploy it. They're going to go spend it. 2/3, 70% of GDP is consumption. So what's that going to do? more money, just kind of like with COVID, right? The COVID checks, more money in people's pockets means more money is going to be injected into the economy. It's not that hard to figure out. Here we go. My YouTube woes. It's just a matter of time. Once you get YouTube down, you're going to blast to 100K. Your lips to God's ears, my friend. I hope so. Can't come soon enough. Do you think REITs like Realty Income are good and safe investments in retirement? So, when you talk about retirement, so we got to obviously change the perspective because our normal perspective is grow a portfolio, build wealth. When you're in retirement, you're trying to generate income. Ironically, my friend earlier that was talking about Comcast, something that has a high yield that is like relatively safe, is something that you'd want to be exposed to. The thing that you do have to be careful with REITs, which a lot of people don't realize, if it's in a taxable account versus a non-taxable account, okay? So the taxation of REITs is different from other companies, all right? So you will pay taxes on money that you don't actually receive when it comes to a REIT, real talk, if you own it in a taxable account. So you do have to be very careful with REITs in general, okay? Now, you also have dividend stocks. You have BDCs, which are business development companies. Those also have pretty nice yields to them, but they also have negative tax implications. So I would say I wouldn't look at it as good or bad. I would say it's one way to generate income in a portfolio, but I wouldn't overweight real estate investment trusts because, again, they still have beta in them. So when the market, all you have to do is look at tariff craziness, right? Think logically. What the hell do tariffs have to do with real estate? Frickin' nothing. But I guarantee you look at REITs during the tariff madness, they all went down. That's going to be the problem with any beta exposure, anything that's market related. Now, you could own private real estate and, own like through Fundrise, and you could still get those dividends, but you're not getting that beta, that change in the underlying value. But I definitely think it has a place in a portfolio, 100%. Would you trust a guy who's self-taught and has receipts and stuff to show they know they are experienced? Typically, no. And here's what I will explain. So when I went to the buy side, I was all jacked up. I was in like my mid-20s, and my boss, my PM, I was like, yeah, I want to invest, da, da, da. And he's like, no one's going to trust you until you have gray hair. So I was like, I have to go get my hair colored gray? What's going on here? And he was like, no, you need experience. So unless this self-taught individual has been through market cycles, I would say for me to be comfortable, the tech bubble bursting, the financial crisis, and then COVID, that would be a good number. But if someone was self-taught, wink, and they started investing after the financial crisis to today, it's like you haven't really experienced any like major downturn other than COVID. And COVID went like this. So I would want someone that's been through multiple market cycles. Now, a full market cycle is typically 20 years. So anybody that's self-taught, I would say, would have to have that level of experience. Now, you see someone like Michael Burry, right, made his chops during the financial crisis and people seeded him with money. You'd want to see that the person has the results, to your point, the receipts. But I would want to see that they had, they've been through market downturns and were able to adjust accordingly. And that's really the key. If someone has actually done well through market cycles, that is really the key. Yes, so this is true. Most finance influencers are traders who lie about their returns to get viewership and lead the viewers down the wrong path for investing when they should just buy VOO and hold. Yes, I completely agree. And if someone asked me, I would say, yes, that's it. Like, this is really the whole channel is just like, hey, like if you have already maxed out your IRA and your 401k and VOO and you need some ideas, here you go. All right. I personally max out my retirement in VOO, IRA, 401k. Anything over and above that, that's where I do individual stocks. But yeah, like my 401k at Rutgers, like big secret, it's VOO. That's it. But yeah, the finance influencers are all about trading. It's kind of funny. I like don't talk about myself, and again, I think it's like I just don't have this big ego like these other morons. But one of my buddies sent me, follows the channel and everything. I think he's in school, and he sent me a screenshot, and I'm like, "What's this?" And it had like his portfolio, and it was like 60 something. It was like bananas. It was like 64%, and then it was like S&P was like 14 or something. And this was like a month or two ago, and I was like, "I don't know what this is," and he just said, "Thanks." I was like, "What is this? I don't know what you're thanking me for." And he's like, "This is from the picks that you've given. I've invested in them, and this is the result." And I was like, "Whoa, great job, dude." And the reality is, like, if you go backwards and you look at what Celsius has done, look at what Lululemon has done recently. Look at CrowdStrike. CrowdStrike doubled. Baba. When I put out the Baba video, people are like, "This company sucks," and it's like 110, 160. So like, I don't like tout myself, but if you look back, I mean, the receipts are there. You can go look at the thumbnail, and the price is on the freaking thumbnail, so you can know how it's done. Now, are there ones that are like, wah, wah? Yeah, like PayPal, that like is an anomaly. Now, if you hold it long enough, it should eventually outperform, but that one's been, a disappointment. But there's definitely more that are up than are down, but that's the real key. Other people just put out so much crap so frequently that it's just, you can't even keep track of anything. So, I'm obviously not like that for sure. La, 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 la. Do, do, do. All right, so hold on, I'm going through the chat. Da, 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 da. Darn boomers. When it's my turn to be an adult, they go 38 trillion in debt and AI is taking most jobs. Yeah. Yeah, it's not good. And they also like to the other thing that I think is like, you don't know what it was like when I was growing up. It was like, yeah, you could actually buy a house and live off of your salary. Sounds horrible. I just think it's a little bit tragic that they've been able to benefit as much as they have, and kind of like look at us like, what's your deal? And yeah, I'm with you on that 100%. Okay, so with that logic, you might as well go in PayPal, given their banking announcement. So what's your take on SoFi? So yeah, I'm still a fan of PayPal. Take on SoFi. I mean, SoFi is definitely ahead of itself from a valuation perspective. They're no different from Ally, except they're focused on a different demographic, Gen Z. But like fundamentally, they trade at double the multiples of Ally, ALLY, which Warren Buffett and Berkshire Hathaway have invested in, and they offer all the same stuff. I think it's interesting because they're trying to focus on like an unbanked and underbanked segment, but there's nothing that's like unique about the company. I'm a fan, but at these levels, I don't think it's going to be the best place to put your money right now. You would be better off in PayPal though. Why do so many analysts on Wall Street downgrade PayPal so often? I think what they're looking at is the payment processing aspect. So they kind of look at PayPal in the same vein as Visa and Mastercard, and they're not. I mean, I use a Visa and a Mastercard with PayPal. So it's like PayPal is just like another party in the transaction. So that's what they're missing. I think the other thing too that they're missing is um, the physical opportunity, like at a store. Like they have 1% penetration in physical stores. I mean, everybody uses PayPal online. They don't use it in a physical store, and that's something that they're trying to change. They have very low penetration in that area. So I think that's why they're kind of negative on it. But it's just bizarre. PayPal will say stuff, AI, banking, like all this stuff, and like it's just nothing pops. But at some point, the fundamentals will bear out, and that's when the valuation will go up. How has AI changed the landscape for CFA? Given retail investors are more in trading due to social influencer making stocks attractive, do you think a good AI model will take out CFA requirement? Absolutely not. So can explain my question better if needed. Yeah, I got you. I understand kind of where you're going with it, but look, I think people are giving a little too much agency to AI. And let me state the following. Robo investing, which is effectively what AI is, robo investing has existed for 15 years. I don't know anybody that uses full on robo investing. Like they don't touch it, they don't do anything themselves. Not one person. Not one. Not one. So the problem is AI operates via rules and humans don't operate via rules. We operate via emotion. Now, I guess you could argue if everybody just gives their agency to AI, then that human emotion part is divorced from the whole equation. And this is just some like horrific dystopian world that I don't really want to be a part of. But the whole idea of CFA, Chartered Financial Analyst, is somebody, an individual, a human, that is able to take your financial situation and have an IPS, an investor policy statement, specific to you to help you achieve your goals, dreams, and desires. The CFA is not meant to beat the market. That is not what the CFA is about. And I do agree. Yes, most influencers are trading based, and that's why I always love my top 3 stocks. It's like it's like there's a lot of great companies out there. There's only a few that are really worthy of investment, and they're only worthy of investing in when they're trading at a discount, and that doesn't happen often. But I am not of the mindset like AI is taking over everything. Just look at financial modeling. Some people say, well, why would you even learn how to build a financial model? Because AI can't distinguish between revenues versus sales. It thinks they're different because they have a different name. It doesn't understand things like non-recurring items. So someone mentioned previously about Celsius. They're like, are you worried about Celsius's PE? No, I'm not worried about Celsius's PE. Why would I be worried about Celsius's PE? It's like 300. Yeah. It's 300 because they have a one-time, non-recurring distributor termination fee because they're terminating all their current distributor contracts and they're going onto the Pepsi distribution network. That's one time. Now, AI doesn't know that that's a one-time item. Now, I know it's like, oh, it will know it. It doesn't. Every single company on planet Earth has different financials. They have different names for different line items. They're presented in different ways. So if there was like one uniform financial statement, yeah, probably a better argument. But I'm not as concerned. I would say in an AI world, the CFA charter becomes more valuable because there's less people that have it. I think people are totally missing the boat. AI is removing people's ability to think critically and reason. No joke. I ask my students, I'll say, hey, what do you think about, blah? What do you think about interest rates? They're like, it's like, it's not a trick question. Like, what do you think? And I know it's like, hey, ChatGPT, what do I think about interest rates? It's like, no, what do you think? I don't care what ChatGPT, I could type into ChatGPT, dude. Nice. Former police officer here. Thank you for your service. Okay, see, here we go. Just having the keys in your possession, you could be charged with DUI. Yes. So again, my uncle and godfather, also former police officer, retired, same thing. So I think it's going to be a difficult, a whole challenge here with Uber, self-driving cars. I don't think it's as clear cut as everybody realizes. It was funny. I was hanging out with last weekend with a buddy who's a retired police officer, and like we were going through all of these scenarios. Like, what if you're sleeping in the back seat? It's like, well, where are the keys? And it's like the keys are the big factor. And I've heard all sorts of stories, like if the keys are on top of the car, maybe like you don't have any ability to put them in the ignition, maybe. But guess what? You don't want to be in that situation regardless. But thank you for your service, by the way, and for the advice. We appreciate it. Hopefully my elf beauty does good if 1/3 are spending over 1K. Well, I'm going to be very controversial here. One thing that, at least in my experience, women are very good at doing is spending money, and usually their significant others. That is something that they're very astute at. But I don't know if it would just be all makeup. I mean, now you got to get into like handbags and all sorts of other stuff as well. Sorry guys, I'm scrolling here. This scroll bar, my God, it's driving me bananas. All right, here we go. Walked away. The angel. I don't know about a double, but I could definitely see 25 to 40% Q4 2026. You definitely would not make my investment plan. Yeah, I don't know. There's so many different options out there, and it's like VOO, and then you want to kind of like go bananas, then go bananas outside of that. All right, my man. Let's see. Yes, 100%. Berkshire, I wouldn't say it's more. I was going to almost have to catch myself and say it's more worth investing in now. When Warren Buffett passes away, which is going to happen at some point, he's like 93, the stock will probably pull back. But the whole idea is that he has handed the reins off to Greg Abel and team. I think he has the like final say. But, when some people are like, oh, did you see Buffett invested in Google? I was like, no, he didn't. I'm like, yeah, he did. I'm like, no, he didn't. I'm like, well, who did? I'm like, Greg Abel did. Buffett invested in Constellation Brands. Okay. 100% guaranteed. Greg Abel invested in Google. Everything that you see happening going forward, that's not Buffett. So you're going to see a lot of investments where people are like, oh, I don't know if that Warren Buffett has changed his style, because it's not him. It's Greg Abel. So look, Berkshire Hathaway has a ton of cash. Buffett did that on purpose to give room for Greg Abel to be his own investor and have his own track record. So I'm still invested in Berkshire. It's not going to change as long as they're invested in great companies that are undervalued. I think that's a no-brainer. 100%. So you're basically saying that your words and facts, and you are Buffett Jr. I try to be like Buffett. I think it'd be like a massive stretch to say I'm anything like Buffett, but I try to take the same lens. Honestly, I don't think Buffett would be investing in all the Mag 7 stocks like we talk about. Look how long it took him to invest in Apple. And I don't think a lot of people even know the story about how he invested in Apple. So Buffett was talking to a buddy of his, and they had these like marathon conversations all throughout the night. What ended up happening was his buddy went to the airport, and on the way to the airport, lost his iPhone in a taxi. He calls Warren Buffett hysterical, like beside himself. And Warren Buffett's like, relax, are you okay? And he said, I lost my phone. And Warren Buffett's like, well, you're talking to me on a phone. You're okay. You can communicate. He's like, no, I lost my iPhone. And Warren Buffett's like, get a new one. He's like, you don't understand. I can't get a new one that had all this stuff. And like the guy was like losing his mind. And Warren Buffett said, explain to me this iPhone. Like Warren Buffett literally has a flip phone. No joke. All right. So this guy proceeds to tell him all the different things. So Warren Buffett's like, you basically can't function without your iPhone. And he's like, yes, I can't function without my iPhone. Nobody can function without their iPhone. That was literally what clued him into, I've got to look into Apple. No joke. There you go. Yeah, totally agree. No one picks 100% winners. Ditto. And the other thing too is what's the time frame, right? So like you could look at PayPal and be like, oh, PayPal don't work. Well, PayPal went up to like $78. Did you sell then? Then it was great. If you're like still holding and you're like, dude, I'm in at 62 and like what's going on here? Yeah, you're probably frustrated, but again, it's about compounding over the long term. Also, don't forget that you're still going to get a dividend. You're still getting the share repurchases piece. So it will go up over time. But again, this goes back to the point I made earlier. Like nowadays, 6 months is not that long of a time frame. But the average person feels like 6 months is like 6 years. It's just not the case. Had to go to Vietnam. 40% of boomer men had to go. Think about, I would rather work harder for my... Yeah, that's a fair point. Yes. No, you can type with errors. That's totally cool. Yeah, dude. I mean, like, I have a lot of buddies whose parents were in Vietnam. I'm happy that we didn't have to deal with that. There, like, every generation has something, like right now I'm seeing with the latest generation, I guess it's Gen Alpha, which is coming up. I don't know if it's still technically Gen Z, but COVID's had a massive negative impact on a lot of people. I mean, if you were in school virtually, like high school, that got a little weird. Into college, also weird. There's a lot of people that I have seen firsthand, horrible communication skills. Horrible. Can't look you in the eye. It's like, are you okay? Yeah, I'm fine. It's like, okay, why do you sound like you're not fine? And just speaking like they're texting. Like that to me is bizarre. But there's a lot of people that are like that. And it's unfortunate, and who knows what like the long-term impacts of it are. Also, this thing, the cell phone, right? I mean, dude, I had a cell phone. I'm going to date myself here. The first time I had a cell phone was like when I started college. Now it's like implanted in people's brains when they're born. I mean, it's just nuts. Like, so there's challenges across the way. Let's see. We've been rocking for a while here. Yeah, this is an interesting one. Do you have any thoughts on QSSLDP developing solid state batteries? So I've actually, during COVID, when I was like bored out of my mind, I was spending a lot of time learning about batteries. And there's a few different ones. I think it was ESS. No. GWH. Yes. GWH is ESS technology. They have the ability to have these iron flow batteries, and iron is basically abundant. So battery technology is, I think, kind of like the forefront. The issue, though, is this is something that was talked about, like, I think it was, I'm trying to remember, like John McCain ran for president, and he said like he was going to innovate batteries. And it's like, okay, like Duracell and Energizer haven't been able to figure it out. Like, what makes everybody think we're going to advance that much faster with batteries? But yes, I do agree. As battery technology advances faster, that will have major implications for energy storage, transfer, proliferation, etc. So the thing is, they're very long-term plays. They're not high cash flow. They're very capital intensive. So the conclusion is they're not like the best companies to invest in. How hard is the CFA charter? I could easily say hardest thing that I have done, period. College, masters, those are kind of walks in the park compared to the CFA. Now, just so I'm clear, it's not the difficulty of the material. It's more so the volume and then the taking of the test. It's a 6-hour test, which is basically the equivalent of everything that you ever learned in college for one 6-hour test. That's really the challenge with the CFA. And the CFA is not, do you know this? Do you know that? It's not definitional. It's more so like really having a deep fundamental level of understanding. That is what the CFA charter is. And that is the real challenge with the CFA. You really have to know what you're doing and what you're talking about. That is the key. So I would say, if you're going to do it, be prepared for a very, 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 very difficult time frame and process. It will test you in ways that you've never been tested before, more so from like a mental fortitude perspective than like an intelligence perspective. It's just so much material that you have to know at such a level of depth that it's incredibly challenging to do that. Incredibly challenging to do that. Oh, I see the questions for my police officer friend are in there. You guys are funny. All right, here we go. Can you explain how micro and macro affect stocks? I never took finance, though I understand my finances. Good for you. And yes, follow up to that, bear markets are short. So macro versus micro, okay? Macro, think of like top down. Micro is bottom up. So macro would be things like interest rates, GDP, funds flow, money supply, those types of pieces. Micro is really like the boots on the ground level. So you can look at stocks either way. You could look at it on a top down or a bottom up. So here's how like a top down macro would be. Right now, what's going on? Data centers. Okay, got it. What do data centers need? Energy. Okay, got it. What type of energy? So you see, you start with this big like macro theme, and then you slowly drill down until you get to the companies. Micro is more so what's undervalued, and you kind of get rid of everything that's overvalued, and then you start looking at whatever those things are. And they could be anything. They could be an airline, metals and mining, a paper company. It could be like all over the place. So you have to kind of have a little bit of a combination of things. What you see a lot of times now, very often, is people get exposed to companies that have no competitive advantage. So people will be like, you know, if you look at the comments on the channel, people will be like, what do you think about this company? What do you think about that company? And I'm like, it doesn't have positive EBITDA. It's pretty much irrelevant. So why are we talking about it? I think, and it's kind of human nature that we all get excited about the big win and we don't think about the downside potential. That is really the crux of it. Is too many people are thinking like, man, if I buy this and it goes up 10x, I'll be worth this much money. It's like, right, but more likely is the market's pretty efficient. It's probably not going to go up 10x. You could just invest in VOO and get 10.4%, but people don't think like that. So what I would say is kind of old school, like Warren Buffett reading the newspaper cover to cover and seeing like, what do I notice in there? And that's where you'll get a lot of really good ideas. really good ideas. So that's the type of stuff that you want to kind of focus on. But that's really the difference between macro and micro. Macro is top down, micro is bottom up. Short-term capital gains tax is also much larger than long-term capital gains, 0, 15, 20, depending on your income. Another reason buy and hold is the best strategy. Yes, and research shows that as well. If you actually look at Joel Greenblatt, the little blue book that beats the market, he actually talks about like his investing strategy is every like 12 months, if something's down, sell it so that you get the tax benefit. And if it's up, wait more than 12 months before selling it so that you get it. So that's like tax harvesting. But yes, that is a way to generate outsized returns. You guys are awesome. I'm just reading through all the comments here. I think the SIC is a great thing for people to take interest in finance. It's not too in-depth, gives you a great foundation. That's true. If you're like not sure about the CFA, I would say the SIC would be like a really, really good appetizer to get the exposure. And if you do the SIE and you're like, dude, I love this, then yeah, go think about pursuing the CFA at that point for sure. Can you explain the buybacks on T-bills that Powell announced and how to think about it on a macro level with the Treasury's balance sheet? Sure. So just remember that the rate, I know this is minds are gonna melt, but the rate really doesn't matter. The rate is a benchmark, and then the market determines like the real true rate. So if you look at monetary policy, you have three mechanisms. You have buying and selling of treasuries, you have the setting of the rate, and then you have the reserve requirement of a bank, how much they have to hold in reserves. Of the three, the reserve requirement is the most sticky and most difficult one to implement. So if the government says every bank has to hold 50% of their funds, their assets in reserves, that's less money that's going to be out in the market. So if you lower that, it's going to move more money into the market, which what is that going to do? That's effectively going to move rates down from a supply-demand perspective. So that's very rarely used. Then you have the other two mechanisms, which is the interest rate, and then you have buying and selling of treasuries. So if you think about the interest rate, what's going to happen, right? If you raise interest rates, that's going to slow everything down, right? Because people are going to be more incentivized to save, and the cost of borrowing is going to be too high. So the velocity of money slows down. When rates are lower, it's the opposite, okay? People are more likely to borrow because rates are low. They're not going to save because they're not going to make any money, so they're more incentivized to deploy capital and invest. So now, what happens when the buying of treasuries occurs? So think about this. When treasuries get bought or purchased, which is what Powell's talking about, that's going to move money into the monetary supply. That effectively has the same effect of lowering rates for all intents and purposes. So what he's basically saying is we're going to do the mechanical equivalent of lowering rates without physically lowering rates by buying government debt, because what that's going to do, when we buy that debt, that money is going to be now in the system. When they sell, it does the opposite. It pulls money out of the system. So that's really what is going on there. So rates are not going to change very frequently, but that's actually the way. So if you look at TARP, the Troubled Asset Relief Program that happened during the global financial crisis, the government stepped up and was like, we'll buy all the toxic assets. So they just bought all of them and they disappeared. So what did that do? What that did was that put money out into the market, which reduced rates, which basically encouraged people to borrow, even though, by the way, nobody was lending at that point. But it also took those toxic assets off of the market. So they were like hidden. There was no price discovery. And then eventually, when everything was better, it's like, hey, here they are again. So by buying that's effectively the equivalent of injecting money into the market, which is effectively going to move down interest rates. So it's a way to have the same effect of moving down interest rates without physically moving down interest rates. All right, friends, I just realized we've been here together for a little more than 2 hours. Always a fun time. Please don't forget to like this. Also, don't forget to tune in on Friday when we release our next video. And don't forget to comment, share. That's how this grows. That's how the algorithm ends up liking us and enjoying the channel. So have an awesome week, and I will see everybody next week. Take care, everybody.